Everybody, welcome to our Thursday Q&A call with we've got Vaughan and we've got Matt, and we'll be talking Platinum Metals Group today. I just want to give you a reminder, it's the last day of the Stockbroker of the Year survey. If you haven't completed that, please do that for us. It's your last chance to get into the draw to win a possible $10,000 into your BDA account, which is good incentive for spending a bit of time on that for us. Thanks very much for joining us today. I'm going to hand straight over to Vaughan and Matt to take it away on the platinum stocks.
Right, thanks. Nothing to add. Over to you, Matt. Your show.
Thanks, Vaughan. Thanks, Sarel. And good morning, everyone, and thanks for joining us. The platinum producers have had quite a wild ride for most of this year, so our recent report discusses some of it and tries to contextualize it, and I'll just be summarizing our report today. So year to date, the PGM producers are down between 30 and 40%, and that's been driven by lower commodity prices. So we've got platinum, which is down 15%, palladium 30%, and rhodium 67%. That's on a year-to-date basis. And in contrast, we've got gold, which is about 7% higher. Everyone always focuses on platinum, but rhodium is a big driver of the revenue for these guys. In the last financial year, rhodium accounted for roughly 1/3 of their revenue. So given that that's down quite a lot, it's obviously going to impact their earnings. We also discussed the Amplat's recent results. They've declared a substantially lower dividend, and it's likely that the peers will do the same when they release their results. We've got depressed PGM prices, especially rhodium, have led us to lower our estimates and our intrinsic values. And then we've got our lower EBITDA outlook has also led us to increase our valuation multiples, which slightly offsets the impact of the low expected EBITDA. And then from these levels, we don't see significant risk. We have changed our Amplat's recommendation from a sell to a hold. Our Sibanye recommendation has been changed from a hold to a buy, and we have maintained our hold on Amplat's. So in this graph, we just contrast the performance of the top-weighted benchmark stocks in the JSE Resi. The red ones are the three PGM producers which we focus on in this report. You can see that they've significantly underperformed the rest of the peers. And at one stage this year, the gold producers were doing very well, but they have started to come down quite a bit as well, especially from their April-May highs, but they've still outperformed platinum. This is just a graph that's got the prices. The big one is rhodium. I mean, they look the same, but you just got to look at the scale. So for rhodium, it's got a very high price point, and that's come down to about $4,000 an ounce. This graph shows the revenue exposure in the previous financial year. So the rhodium is the black part, and you can see it's about 34 to 38% of the respective platinum producers' revenue exposure. So it's in the last financial year, it was the largest revenue driver. So given that it's down 70%, it will and it has impacted earnings. So it's a big part of revenue, but as a percent of the volume, which is measured in ounces, it's only 7%. But because of that big price point, it does contribute a lot to the top line. Yeah, so it's about 7% for all three producers. This is rhodium. In this chart, we just look at the company performance versus the actual commodity prices. And then we've also put in a 4E PGM basket, which we've split 50% platinum, 40% palladium, 7% rhodium, 3% gold. And that's based on an average of the volumes across the South African platinum producers. So generally, the drivers of these companies are commodity prices, exchange rates, volumes, and costs. Obviously, price over the last period has been the largest driver. Exchange rates have been marginally weaker, and that's been beneficial. And then so far, what we're seeing is we are seeing slightly weaker volumes and slightly higher costs. But overall, the sell-off of the compared to the basket seems to be a little bit punchy. So given that all of these companies have sold off quite a lot, we try to have a look at the historical relationship between the ALSI and the RESI, given that the PEs are quite low. So the RESI's PE is trading at about 6 times now. And we wanted to see if there was maybe an indication of future outperformance and where it might come from. But you can see here there doesn't appear to be any significant relationship. So the low Ps are not indicative of future outperformance. So we still remain cautious with the sector, and it's proven very difficult to forecast which direction it's going to go. We have also released a number of reports over the last year on the platinum producers, and in each one of them we've lowered our EBITDA forecasts as the commodity prices have come down. This last report's not any different. We've lowered them again, but in this one we've increased our valuation multiples. So basically, in this sector, it trades at low multiples when it's doing well, and it trades at high multiples when it's doing poorly. And we think we're at that stage now where we're changing over from a well-performing sector into a slightly underperforming sector, and that will, we think there is support for higher valuation multiples on that basis. So for Amplats, we've got an intrinsic value of 772, and we've changed our recommendation to a hold. On Sibanye, we have an intrinsic value of 47 Rand, and we've changed our recommendation to a buy. And then on Implats, we've got a hold with an intrinsic value of 114 Rand. Most of those recommendation changes have come from the weakness in share price. We think they've been oversold in the short term, and I think there's relatively limited downside from these levels. And partly why we think that is that the market is overemphasizing the structural changes from traditional vehicles to electric vehicles. In our report, we detail a number of reasons why. A number of reasons to be positive on platinum in the short term. One of them is that supply is limited and demand exceeds the supply for platinum. For palladium, it's a little bit of the opposite, but demand is still stable and growing. The hydrogen economy has not taken off yet, and that will create additional PGM demand. There's also not enough lithium supply to meet the battery electric vehicle demand. So for all these 2030 forecasts for how many electric vehicles are going to be on the road, they are not taking into account the amount of lithium that needs to be mined. And currently, there's not enough supply to meet that demand. Another risk is that China controls most of the supply chain for lithium. So that's an additional risk. So we're slightly more positive in the short term, while acknowledging there are some long-term structural changes for these PGM producers. I'll hand over to Shaun now for the technicals, and then we can go to Q&A.
Good morning, everybody. Yeah, all three charts obviously will be bearish, so I'll try to put a positive spin on them. So we're looking at Anglo Platts. It's trading below its 200-day moving average, and as I said, the long-term trend is bearish. In the medium term, the share is also trading below its 21-day and 40-day moving averages. And in the shorter term, it's testing what we call the lower support level of a support zone. And this also happens to be very close to what Matt's intrinsic value of 772. And as Matt said, it's got a hold recommendation on Amplats. On Implats, very similar chart. So you just move to Implats. There we go. Yeah, very similar chart. Also very bearish, trading below its 21-day and 40-day moving averages, and also far below its 200-day moving average. So obviously leaving the medium and long-term term bearish. In the short term, again, it's testing that support at that 117 Rand level, which is close to our intrinsic value of 114. So the MACD indicator in both shares so far, we're trading in oversold territory and confirming the bearish price action. Again, on this share in Platts, we've got a hold recommendation. So let's go to Sibanye. Okay, Sibanye Stillwater. Yeah, on this share, what I like about it is, yeah, it is oversold like all the other shares, but this one I think it's got more upside potential. It's testing that upward sloping support trend line, although it's still bearish based on the moving averages. The other indicators like stochastics that have bottomed out and starting to move up. And yeah, it's got a lot of more upside potential compared to the other two. We know that the intrinsic value in this stock is 47. So yeah, it's got more upside potential. And I see from this morning's trade so far, Amplats is up 2.2%. Impala Platts up 2.59%. Sibanye is up 4%, 4.41%. So obviously a lot of traders liking the share too. But we're giving a buy recommendation on Sibanye, and yeah, it's one out of the three. Is the ones I like the most is Sibanye. Thank you.
Thanks very much, Shaun. Thanks, Matt. Whilst you guys think about your questions, you can type them in the chat for us, or you can put up your hand and just ask them outright. We ask that you switch on your microphone so that we can put a face to the voice. Vaughan did a cool explanation to us this morning about his take on macro things that might influence the sector as well. And Vaughan, you spoke about China, and you spoke about the Ukraine commodities and that. Would you mind replaying that for the audience? I found it very interesting.
Oh, Sarel. So obviously what we think we're seeing, because anyone who tells you they know don't know, so never believe them. What we think we're seeing for the last, let's call it 2 months, is that the first 6-7 months of the year was all about the tech sector, and it was all about concerns over growth. So when that happens, you go long duration stocks, which is the tech sector, and then we've had the additional factor of AI, which has driven these things to pretty impressive heights. Interestingly enough, what I'll add to what I said to this morning is that we're watching NVIDIA as our canary in the coal mine. And those of you that get the FT will see today that a lot of these Chinese companies are pre-buying NVIDIA chips because they think the US government is going to block the sale to China. So we believe that that's where the NVIDIA super earnings forecast came the last quarter, and it might even indeed be this quarter. But watch out when that goes into the base. In any event, so what we think is happening at the moment is that the market is now moving into an environment where they don't think there's going to be any chance of a hard landing. We are not in that camp, but incidentally, it doesn't matter because that's what the market thinks at the moment. So what's happening is that's going late cycle. So that's why your value stocks, your banks, and your energy are starting to play, let's call it the catch-up trade, the last 2 months, incidentally, which has got us a lot of alpha in our offshore fund that we manage. What is very interesting in addition to that is that energy is benefiting. One of our colleagues was saying that there is potentially a natural gas strike in Australia. Sorry, one of the companies there, and they provide about 10% of natural gas. There's a bit of a spike. But equally, on a more longer term base, you saw the last couple of weeks, Ukraine basically try to sink a ship in a port that is responsible for 2 million barrels a day of exports, 1.5 million barrels a day from Kazakhstan, and about 500,000 barrels a day from Russia. So it means that the supply and demand, which is already tight for oil, gets made a little bit more exciting in this kind of environment. Finally, our context on we don't like China. We think the stimulus has been weak, and we think they can't do very much stimulus. But it has surprised us a little bit that iron ore prices have stayed strong, copper stayed strong, but platinum has been quite heavily hit. We do think the supply and demand, like in oil, is quite good for the commodity, and obviously that's because we are big suppliers of it in South Africa. So that's why within the complex, we like platinum on a relative basis, and in these particular stocks, as Matt's highlighted, and we don't like iron ore at all. We don't like most of them, and we like oil. But there is a large degree of cyclical trade and the catch-up trade occurring in the markets right now. I'm interested that platinum is and Sasol is doing great today, so a fantastic call for Matt. But these things are very, very volatile, so we have to watch this quite closely.
Thank you, Vaughan. I see we have got a couple of questions. Clive says, thanks for the great presentation, Matt. We'll do some research into Sibanye Gold, Sibanye Stillwater. Dino says, given rhodium's revenue dominance in all three companies, what are the demand-supply fundamentals for rhodium in the medium term? Is there a surplus or a deficit?
Yeah, so out of the stuff that I've read, there's no, I haven't read anything conclusive about rhodium. Most of the research is on platinum and palladium. One is in a surplus, one is in a deficit. The issue with rhodium is that it's only traded in the physical market, and it's relatively compared to the other three, there's surprisingly very little research out there on rhodium.
Okay, thank you.
But I might just add that the rhodium prices, part of the reason why rhodium has been underperforming the rest is that it is being substituted by platinum and palladium because they are cheaper, and that'll probably continue until there's a bit of parity between the three metals. It's still at $4,000 an ounce. It's still quite a way above its its historical price average. Yeah.
Okay, thank you very much. I hope that answers Dino. Bekir says, what will happen to the palladium price when the war is over? Any idea how much stockpile Russia is currently holding? You got any idea, Matt?
No, I'm not sure about how much stockpile they're holding, but there shouldn't be much of an impact once the war is ended. We're already seeing the supply issues that created the when the Russia war broke out, palladium price shot up because of the supply constraints, and that has already started to ease as they've found channels to get it out of to get the palladium out of Russia. So I don't think there'll be a massive change once the war's over, and the same applies to the stockpile.
Okay. Thank you very much. Then Eugene says, shouldn't we have considered Northam along with these three as the fourth option with respect to the PGMs? I don't know why you excluded Northam in your analysis here, Matt. Maybe you can tell us what your consideration was.
We've just focused on the three higher quality and the three biggest ones. Northam's quite a smaller player.
Okay.
Yeah.
Cool.
Yeah. So we don't have an opinion on Northam. So you'd have to do your work. We, as Matt said, focus on the big liquid ones. That's our process.
Perfect. Thank you. And then Gavin says, how do you see the catalytic converter demand play out over the next 5 to 10 years, given that it's the biggest user of the PGM basket? I think you have touched on it.
Yeah, so I mean, our view is that so we've got a short-term view and a long-term view. Like the long-term view is that catalytic converters, there should be a low demand for PGMs over the long term because of electric vehicles. What we're concerned about is that the market is overemphasizing how much electric vehicles there will be. So in the short term, we think that there'll be enough PGM demand in the short term from hybrids, from hydrogen vehicles, and that should support the PGM price. And those, just remember, hybrid cars also have got catalytic converters, so it's not like the hybrid cars are free from catalytic converters.
Yeah, I seem to share your sentiment there. I think it's still a long way away before we start driving electric vehicles all over the world. It's definitely taking off, and it's been a bit of a badge to drive one, but there's certainly some challenges in getting the stuff charged, especially in South Africa. And then I think in the rest of the world, we're seeing more hybrids than full electrics, even though these companies have promised that by a certain time they'll stop reducing the combustion engines. I think it's far from over. Another interesting use of rhodium that I saw the other day was that it's being used to coat fiber optic cables. So I mean, it's being used in technology that drives our communication. So I don't think the catalytic converter, I think they'll find a lot of other uses for it. I don't think the catalytic converter will stop the profitability of these guys. And I guess what Vaughan and them are saying is, don't jump balls to the wall into Sibanye Gold or Sibanye Stillwater here. But if you do have platinum metals companies in your portfolio, then you should rather switch out. And if you have Impala and Amplats, then rather opt for something like Sibanye, which has got a bit more potential and a lot more upside should things turn around. All three stocks are looking a bit grim on the technicals and trading down and drifting lower. But certainly Sibanye are the firm favorite to turn around when things get better and the commodity price settles down or actually picks up a bit. I don't see any other questions. Anybody in the room want to add something? Doesn't sound like it. Thanks for a very comprehensive report, Matt. Guys, I want to invite you, if you didn't get the report, drop us a mail and we'll gladly send you the report. It is very comprehensive and it's some great work. Vaughan, thanks to you and your team who come here every Thursday and give us your insights. It helps a lot for us as retail clients to try and wrap our minds around what it is that we should consider when building our portfolios and adding and taking away stocks and so on. Thank you very much for everybody who's joined. Please remember that next week, Thursday, we're going to have the Drifters Workshop. So next week, Thursday, just after 6 at night, I'll send the invites out in time. I'll probably get them out tomorrow, and then we'll spend some time on derivatives next week, Thursday night. But we'll have our normal Q&A session at 11:30 as well. Thanks very much, guys. Have a fantastic Thursday. Thanks for joining us. Cheers.
Thanks,
Bye.
Cheers.